Oil prices have been rising for many months now, but finally it seems that we are seeing some signs of trend exhaustion. We've seen both Brent and WTI breaking above $60 now and continuing to make strong gains. WTI seeing some resistance around $63, but remaining on a firm footing. But that may be starting to change. As we can see on the chart here, the momentum indicators at the bottom, that is the stochastic and the MACD, are both showing signs of divergence. So as prices have been moving higher, the MACD and the stochastic have been making lower highs. So that's a red flag that maybe the trend is starting to weaken. Now, the proximity to the event next week, this is the OPEC Plus event, when they're expected to discuss production once again. I don't think that's a coincidence. I think there's probably maybe a little bit of nervousness growing because prices are now so high that there is going to be a lot more discussion at this event, and there's going to be a lot more opposition should Saudi Arabia push for more restraint once again. The global economy is looking far more optimistic. The vaccine rollout in many countries is continuing to improve. Here in the UK, for example, we have now seen the reopening plans laid out, and we are seeing cases of fatalities falling across the board. And I think this is making people a lot more optimistic about the outlook now for the second half of the year. And that in turn is continuing to lift these oil prices. Now, that creates a bit of a problem potentially for the OPEC Plus group. Unless Saudi Arabia is on board with raising production, then it's going to create some dispute. The result last month was that Russia and Kazakhstan were allowed to raise production slightly, but Saudi Arabia ended up cutting their output by 1 million barrels a day. So that was really something that got markets on board, that allowed the agreement to be reached, that kept the unity within the group, but also continued to push oil prices higher because of that 1 million barrel cut. That isn't sustainable in the longer run, and I think there is going to be more opposition now to any encouragement towards maintaining output at these current levels. Now, at this moment in time, we haven't seen a massive downside risk factor from US shale, but with prices at these levels now, it has to be expected that US shale is going to come back on board relatively fast and pose a threat to many of these OPEC plus nations and their output levels and provide competition. And I think that's one of the reasons why we are going to see increasing wariness. It's the main reason, it seems, why Russia has been pushing to increase output, and it would be sensible if other countries started to fall more in line with that way of thinking and less so with what the Saudi argument has been up until this point. So as I say, that meeting next week is going to be critical, and I think the loss of momentum that we're seeing in prices now is probably a reflection of the fact that the outcome of that meeting is a little bit uncertain at this point, and perhaps maybe that is leading to some a little bit of profit taking maybe around these levels and that loss of momentum. So the key levels as far as this is concerned, $57, $58 to the downside is key for me. This is where we can see recent support and resistance, but it's also the rising trend line as well, still well above those moving averages. So prices still at extended levels compared to historical norms. To the upside, $63 obviously is that most recent peak, but we could still see it push on further. Just because there is divergence at this point, it doesn't mean it's a negative sell signal. It just means that there are red flags appearing that the trend is weakening. So there is still potential for this to move up to the mid 60s range, even a little bit higher. But I'd be keeping a very close eye on those momentum indicators between now and the OPEC Plus event late next week.